And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, we're working on your information flow. And we're doing so by talking about a place that I've already talked about on the show, but I'm going to talk about it some more today. And you're probably saying, what place is that? Well, it's a place in Tennessee. And it's got one of the funniest names I think I've ever heard. As a matter of fact, there's a song about this place involving a choo-choo. Did I give it away? I did, didn't I? I totally gave it away. I blew it right there. Yeah, I'm talking about Chattanooga. Now, Chattanooga is a really neat place. I experienced Chattanooga in 2025 for the first time when my wife and I took a whirlwind tour through the great state of Tennessee. And one of the reasons we did that, well, there's actually two reasons why we did that. Number one, we wanted to determine whether or not Tennessee was a great place for us to invest. And the second part was we wanted to determine whether or not Tennessee was a great place for us to live. And you know what the answer to both of those concerns resulted in? Affirmatives, positive results. Not only did Tina and I determine that Tennessee is a great place to invest in, we determined that it's a great place to live. So we moved here, and we're looking to invest here. And I think Tennessee, with its different metro markets, its secondary markets, and its tertiary markets, provides some outstanding investing opportunity. Now, I want to comment on this town in Tennessee with the funny name that has something to do with the choo-choo, called Chattanooga. Yeah, Chattanooga. Some of you, I'm gonna do this, and this might be bad podcasting, this might be bad radio, but I'm gonna do it anyway, just because I feel the need. Some of you have never heard the song Chattanooga Choo Choo, and it's kind of a classic. If you've never heard the song Chattanooga Choo Choo, go on your favorite music app and listen to it. It's a really neat song. It'll get your foot tapping. It'll make you go, hey, that's a neat song. And what it's also going to do, it's going to, in your mind, it's going to impress the concept of Chattanooga. Because once you hear the word Chattanooga, you can't unhear it. It's not like other towns where, like, I don't know, Bangor. No, that's not a bad one, but I think Chattanooga is more interesting than Bangor. Then you got towns like Seattle. I mean, Seattle, it just kind of sounds kind of chill, right? But Chattanooga sounds like there's stuff happening in it. And there is stuff happening in Chattanooga. As a matter of fact, Tennessee, as an overall state, is in a growth pattern. In other words, there are more people moving to Tennessee than moving away from Tennessee, which means the net migration is increasing. There are more businesses moving to Tennessee. There's several major corporations that relocated their corporate headquarters to Tennessee, and the state is, well, it's still booming. And I think Chattanooga is a great place for you to invest. Not only is Chattanooga a great place to invest, it has the Great Smoky Mountains. It's got Lookout Mountain. It's got the Tennessee River. It's got some really cool things going for it. And it's giving you the opportunity to invest your hard-earned money into a tangible asset such as real estate and make some pretty darn good money doing so. So what I thought I would do is I would share with you some information about some deals that were shared with me recently by Vincent. Now, Vincent is a member of the Lifestyles Realty team, and the Lifestyles Realty team exists specifically to work on behalf of the Lifestyles Unlimited membership pool. Yeah, the Lifestyles Unlimited membership pool. Now, I don't know if that's exactly what it's called, but that's what I called it, and I'm part of it. So what is this Lifestyles Unlimited membership pool thing? Well, first of all, it's not really a pool. It's just, well, I guess it is kind of a pool. We all kind of show up and we all kind of get in. We all do our thing in the pool. And then when we're done hanging out in the pool, we get out of the pool and we hang out with each other and we do real estate and, we talk to each other and we have a really good time. Oh, and by the way, the most important thing about Lifestyles Unlimited that I didn't point out, that I'm going to point out right now, is that Lifestyles Unlimited is going to teach you how to do real estate the correct way. Because unbeknownst to you, you could listen to this show and you get all hyped up about real estate and go, hey, baby, we're gonna take all of our hard-earned money, we're going to buy real estate, and you could crash and burn. I mean, you could seriously crash and burn. You've heard the stories about people crashing and burning in real estate. The majority of those are true. But there's one commonality that occurs in all those crash and burn scenarios. They don't educate themselves before they pull the trigger. They don't learn how to do it right. They don't go out and find a mentor who's done it, who will help them through the process. No, they just go, I could do real estate. I turned on a couple YouTube videos. I got this. Or I went to AI and I put in a few things in AI, and you know what? I got this. I can do this. And you have no idea what you're getting yourself into. You have no idea how to build the business. You have no idea where to invest. You have no idea at all. And that's where Lifestyles Unlimited comes in. It gives you all those ideas. It completes the picture for you. Now, Vincent, the guy that sent me these properties that I'm going to talk to you about today, is a part of the Lifestyles Realty team. It's a separate organization from Lifestyles Unlimited. What it is, it's a group of realtors that are a part of Lifestyles Realty community that work specifically for members of the Lifestyles Unlimited community, provided we want to work with them. We don't have to work with them, but here's what I know about them. They are trained specifically to work with investors. Wouldn't that be a good thing for you to understand? To work with somebody that understands what you're looking for? All right, that's kind of how it all comes together. But in the next segment, what I'm going to do is I'm going to lay down 3 properties for you to figure out. Stick around. Welcome back to the show. So as promised, I'm going to get into 3 properties that were sent to me by Vincent that are in the greater Chattanooga market. Now, these are not multifamily properties. These are all single-family assets. And they're all single-door, single-family assets. Now, why would I point that out? Why is that important? Because I want you to understand we're not dealing with commercial real estate here in the form of multifamily. We're dealing with non-commercial real estate in the form of single-family assets. And I pointed out that these assets only have one door as opposed to being a duplex or a triplex or a fourplex, which would have respectively 2, 3, or 4 doors, which are also, it kind of sounds like they're multifamily, but they're not. They're actually looped together or lumped together with one door single family, and they make up what is considered the non-commercial residential arm of real estate, which is single family. Yeah, is that confusing or what? It's really not that confusing once you wrap your head around it, but this kind of gets to my point that I was making earlier in the show, which is some of you just, you get a burr up your saddle and you just want to go run wild to the wind, and you just want to go out and buy a piece of real estate without knowing anything. And something as fundamental as about the type of real estate could create a problem for you. Because if you're trying to buy a single family and you don't know how to do it, you can make some big mistakes. If you're trying to do multifamily and you definitely don't know how to do that, you'll make even bigger mistakes. It's just the way it is. So how do you avoid making all these mistakes? You become a member of an organization like Lifestyles Unlimited, the organization that sponsors this radio show, and you allow them to teach you the way I did. Yeah. Lifestyles Unlimited taught me everything that I know about real estate investing. Now, I knew stuff prior to becoming a Lifestyles Unlimited member, but I didn't have the complete picture of how to do all of it completely correct. I was investing in real estate and I was doing a lot of things wrong, and it affected my earning potential because there were just things I just didn't know. I didn't know what I didn't know. And it kind of bit me. And when it bit me, it kind of hurt. And I didn't like it. So how did I fix it? I joined Lifestyles Unlimited as a member. I did that, wow, almost 9 years ago. And I allowed them to teach me what I thought I knew and what I didn't know. And they did an excellent job. And I'm sharing a lot of that information over the airwaves with you because I think you need to know there's a better way to achieve what you're working so hard to achieve. Now some of you, you're on a glide path. In other words, you're going to work until the age of maybe 65 or 67 or 68, whatever your maximum Social Security age is. And you're going to put money into a 401k or an IRA or a 529 plan or one of those other government-sponsored retirement plans, and you're going to hope for the best. And you're going to hope when you get closer to my age, and I don't know if I'm older than you. I'm older than most of you, I think, but I'm not older than some of you. How's that? I mean, I'm 62 years of age. I retired myself fully at the age of 55. Completely retired. Haven't looked back. You can do it too. As a matter of fact, you could do it sooner. You don't know that, do you? Because nobody talks about that at the water cooler, do they? Oh, well, I've got a plan where I'm investing in real estate, and I should be fully replacing my income in, say, about 7 years. Nobody says that around the water cooler, do they? Now, I'm not suggesting that you can retire yourself in 7 years, because I don't know what your situation is. But I do suggest that I know Lifestyles Unlimited members that have accomplished that feat. And I know some that have accomplished it in a lot shorter period of time. I'm actually one of those people. Once I got the roadmap, once I received the education, and I started putting into action, that was the game changer right there. It totally took me from zero to hero. Well, I won't say overnight, but it felt like overnight. Now, real estate isn't a get-rich-quick scheme. It takes some planning. It takes some effort. You got to do some things. You got to build a team. You got to educate yourself. Number one, you got to educate yourself. I'm just telling you, you got to educate yourself. And just getting a book like Rich Dad, Poor Dad, it only gives you part of the equation. It's a great book, by the way. It really does. Rich Dad, Poor Dad, if you haven't read it, by Robert Kiyosaki, I'm here to tell you, it made an impression on me when I read it a long time ago when it was first coming out. And it'll make an impression upon you. But it doesn't give you 100% of the information you need in order to affect the business of real estate investment. You got to have an organization like Lifestyles Unlimited to give you everything else. Very important. Now let me take you over to Chattanooga, because that's what I'm really supposed to be doing right now. And let me talk to you about 3 different properties that Vincent said to me. And let me just pull them up because I've got them right here. First one's a 2-bedroom, 2-bath, 1-car garage, 1,000 square feet, built in 1946. Says attractive 2-bedroom, 2-bath home with 1-car garage close to downtown Chattanooga and the University of Tennessee at Chattanooga. Easy refresh opportunity. Siding, roof, windows, HVAC have all been updated. Okay. Sounds kind of promising, right? What do you think about that one? Not enough information, right? I know all the Lifestyles Unlimited members are out there yelling at me going, just give us the numbers. We don't care about the fluff stuff. Give us the numbers. Yeah, but the rest of the audience cares about the fluff stuff. So I'm going to give them the fluff stuff, and then we'll get into the numbers. Property number 2, 4-bedroom, 2-bath, a little bigger, 1,973 square feet, built in 1955, solid all-brick 4-bedroom, 2-bath opportunity. This attractive mid-century home sits on a large corner lot in a great neighborhood close to downtown Chattanooga. Large open floor plan with hardwood floors, newer roof, and HVAC. Sounds pretty good too, right? All right, what about this one? Let's hear about this one. This is a 3-bedroom, 2-bath, no garage, 1 mile from Southern Adventist University. Very desirable location with great schools and accessibility to Chickamauga Lake, Cambridge Square, the Greenway, Volkswagen, McKee Foods Corporation, and downtown Chattanooga. This home has several updates throughout the years, light rehab, refresh needed. Okay, which one do you want to buy? The pretty one, right? Which one's the pretty one to you? Because depending on who you are, some of you like the 2-bedroom, 2-bath. Some of you like the 3-bedroom, 2-bath. Some of you like the 4-bedroom, 2-bath. Some of you like the older property. Some like the slightly newer property. Some like the property that it was on the corner lot. Some like the fact that there was HVAC. Some like the fact that the listing mentioned it's a light rehab, and you don't want to do a heavy rehab for your first one, right? Okay, all these things are very important, but not right now. Because what we have to do right now is we have to determine, is it worth it to invest in these assets? In the next segment, what I'll do is I'll break that down for you. Stick around. Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, we're working on your information flow. And we're having some fun in the background. I'm just going to share with you what kind of goes on in the background, because those of you on the other side of the camera, or those of you who are on the other side of the monitor, or those of you that are just kind of watching this or listening to this, you have no idea of what goes on in the background that allows us to create the content for you. And sometimes it's just terrible. What happens in the background is just enough to rip your hair out. But the good news is we're educated. We understand the parameters of what's happening, and we have the knowledge to apply to the situation so that we can get it under control. And that's what we do. And then we have a lot of fun, and we joke about it a lot. That's part of the reason I still got this big smile on my face, is because Rick and I were just kind of cutting it up in the background, if you will, before the segment started. And I just thought I would share some of that with you, just because I think that you wanted to know. And it kind of ties in with the point that I'm making, that you need to be educated if you're going to be a real estate investor. Yeah, it absolutely ties in with that point. Because notice I pointed out we're educated in what we do in our craft of creating radio, creating podcasts, creating the content that you absorb. We know what we're doing. We've been educated on how to do that correctly. You, on the other hand, are thinking about doing real estate. I was going to say radio. Maybe you want to do radio. I don't know. But when it comes to the real estate side, are you educated? Do you have the knowledge to do the things that I do, that the members of Lifestyles Unlimited do? That's for you to determine. That is 100% on you. Now, I will tell you, Lifestyles Unlimited is uniquely positioned to help you accomplish that goal, that task, that requirement. Become a member. I'm serious. Become a member. Check it out. To me, it's worth a couple $100 to check it out, to see if Lifestyles Unlimited is even worth your time or effort. And here I'll make it one better for you. It doesn't cost anything to check out Lifestyles Unlimited. Go to lifestylesunlimited.com. When you get there, click on Start Here. See where it takes you. It's going to take you to a place that's going to give you some information about Lifestyles Unlimited, what we do, how we do it, and it's going to give you an opportunity to become a member. Simple as that. You become a member. You go through the 16-hour courseware that all members of Lifestyles Unlimited take when they become new members. It's instructor-led. It's available in person. It's available online. Still instructor-led. It's live, interactive. It will teach you what you don't know. It'll teach you how to handle information like this, like the information I'm about ready to drop on you. Remember that first property that I talked to you about, that 2-bedroom, 2-bath with the 1-car garage close to downtown Chattanooga? Here's the numbers. Here's what the Lifestyles Unlimited members want to hear. They don't care about all that nice stuff about the property. What they care about is the potential of the asset. Because if it doesn't have the financial potential, it just doesn't matter. All that other stuff just doesn't matter. We're not going to mess with that asset anyhow. We'll leave it for somebody else. But if it has the wherewithal to meet the financial potential that we're looking for, we will pursue the asset. Then all that fluff stuff kind of becomes nicer. So let me tell you a little bit more about asset number one, the 2-bedroom, 2-bath property. It's worth $170,000 in today's market in its current condition. That's what Vincent says it's worth. But if you fix it up, if you breathe new life back into it, bring it back to its heyday from the 1946s, it's really worth $260,000. So we're dealing with a $90,000 spread of equity. And what we as Lifestyles Unlimited members are trying to figure out is can we acquire the asset, renovate it, capture equity, get cash flow, do all the things that we do with our real estate, get paid 5 different ways, and have it make sense. That's what we're trying to figure out. So with that $90,000 worth of equity, I think there's opportunity here. The estimated equity that we should capture in this property is about $41,000, meaning that our acquisition and our repair costs on this asset should be no more than, say, $219,000. That allows us to capture $41,000 of additional equity in the property and gets us to that $260,000 price point. Pretty interesting how I did that, right? It's going to require around $33,000 to do this deal. $33,000 of your own money. You would buy this asset with the $33,000 at $170,000. You would take advantage of a hard money loan and bring in financing to cover the rest of the repair costs over and above the $33,000 you're putting into the deal. And then you'll refinance the asset into long-term financing after you rehab the property and you find a resident to sign a 1-year lease and move in. You put the long-term financing on the property, cure the hard money debt, and then you'll operate that property. That property should produce about $363 a month in passive income. Not too bad, right? So what does that mean? Is that a good deal? Well, it sounds like a good deal. It does. It sounds like a good deal. Let me just tell you what I see from the finances, from the spreadsheet side of life. We're going to put $33,000 into the deal, and we're going to capture an additional $41,000 of equity. That gives us $74,000 of total equity that we're working with. It's pretty cool, right? That represents a 124% return on capital gain. What that means is we took $33,000 of our own money, we put it into the deal, we obtained an additional $41,000 worth of equity. Remember, a total equity of $74,000, which means we've effectively doubled our money. We've more than doubled our money by investing in this deal. This deal is poised to present $363 per month in cash flow. When you annualize that, that works out to be almost $4,400 per year. That's $4,400 of additional income coming into your household off of one asset. That represents a 13.2% return on the cash flow. A 13.2% return. Now, if you take into consideration the fact that we have principal pay down, there's natural appreciation, and we're going to hold this property for at least a year and a day so that we can take advantage of the tax advantages. In other words, we're going to avoid short-term capital gains taxes and allow for long-term capital gains taxes, which are much more beneficial to us as real estate investors. And let's say we just held this property for, I don't know, I'm thinking 3 years. Let's say 3 years is our holding period and we decide to sell the property. If we sold the property in 3 years and we take into account natural appreciation, we take into account all the ways we make money in real estate, we should walk away with about $57,000 of additional return over and above the $33,000 we put into the deal, resulting in us turning $33,000 into $90,000 in just 3 years. More after this. Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Again, my name is Al Gordon, and again, I'm going to give you information about these properties we're talking about. And so far, we've only talked about one of the properties. And I basically told you could buy this property when you know how to do this correctly. Invest $33,000 of your own money, renovate the property, own and operate it for 3 years, and then decide to sell the property at the end of 3 years, and you would effectively turn $33,000, into a little over $90,000. I think that's a pretty healthy return on investment, don't you? As a matter of fact, it turns out to be about 173% or 174% return on investment over a 3-year period. I think that's a little better than what you're doing for investments right now. Now, ironically, I mentioned there's 3 properties, but I've only talked to you about the first one, the little 2-bedroom, 2-bath one, right? What if I told you that if you upscaled a little bit, if you went after, say, the 3-bedroom, 2-bath property or the 4-bedroom, 2-bath property, that you could invest effectively the same amount of money into the asset. Maybe you'd have to go up an extra $500, or maybe you'd have to go up an extra $1,000. But in doing so, you could do better. You could absolutely do better. As a matter of fact, here's what I'm saying. If you instead bought the 3-bedroom, 2-bath or the 4-bedroom, 2-bath property, instead of taking $33,000 and turning it into $90,000, you could take, in one instance, $33,500 and turn it into $110,000, giving you a 229% return on investment. Or you could take $34,000, only $1,000 more, invest it, and you could walk away with almost $116,000 of total returns after 3 years, representing a 240% return on investment. What's the better play? Well, the better play is the one that makes sense to you. Now, these other two properties, there's something significant about them that they do better than the first property that I told you about. The one you can buy for $33,500. That particular property is available to you to buy when you know how to do it. Now, it's not available to you per se right now because this is an asset that was presented to the Lifestyles Unlimited community, and this is a really good asset. And one of the neat things about this asset is it produces $584 per month in cash flow. It does better than $363 per month that initial property was putting out. Now, equity capture-wise, you get about $55,000. So you put $33,500 into the deal, you get $55,000 of equity capture. That results in 164% of return on capital gain, which is better than the 124% that we received in the first property. Cash flow on this asset is also much better. Instead of getting 13.2% return cash on cash, you're getting 21% return cash on cash. As a matter of fact, instead of getting like $4,400 per year in income like you would on the first asset, you're getting over $7,000 per year on this asset. For those of you looking for cash flow, this is a better investment opportunity. But for those of you looking for equity capture, the third property is actually better. Because in the cash flow area, it only does $5 more than the initial property. It doesn't do $584 like that second property. But what it does do for you is it allows you to invest $34,000 into the asset and capture $68,000 of additional equity. It's a big number, folks. It's like what, $112,000 of total equity? If my math is mathing, maybe it's $102,000. Yeah, I think it's 102. I'm using my brain calculator. Sometimes my brain calculator isn't as accurate as the calculator on my desk, which I don't know where it's at. That's why I'm using the brain calculator. But it still represents a 200% return on capital gain. And it's that extra net equity that we're capturing that allows the third property to return even better. But if you're looking for cash flow, if the cash flow is more important to you, I say go with property number 2. But if total return on investment or equity capture is the way you want to go, property number 3 is the way to go. What I really want to share with you right now is the fact that these assets can do so much more for you than what you're doing right now for investment. What you're doing now for investment is the lazy road. You're a lazy investor. Sounds harsh, doesn't it? Sounds like I'm trying to pick a fight with you, right? Well, I'm not. You probably whip my butt, and I don't need that at my age. What I'm trying to do is get your attention, though. I don't want you to be a lazy investor. And the reason I can call you a lazy investor is because I used to be one too. Yeah, I was a lazy investor too. Yeah, I did what you did. Maybe not the way you're doing it, but I did what you did. When I diversified into real estate, I didn't get properly educated. I bought some stuff. I did kind of okay. I didn't do as okay as these deals that I'm showcasing to you today would do for you. But I did kind of okay. And then I became a member of Lifestyles Unlimited. And I changed lazy into active. But not so active that I'm spending 40 hours a week engulfed in my real estate business. I don't spend 40 hours a week engulfed in my I've never spent 40 hours a week engulfed in my real estate business unless I was doing a rehab by myself on a property. Then maybe I spent 40 hours a week engulfed in my real estate business, which, by the way, you shouldn't do. Don't do that. That's not an effective use of your time. When you're educated, when you become a member of Lifestyles Unlimited, you will become educated. You just, unless you want to be a lazy real estate investor, in which case you would still be a lazy investor. And what I'm trying to get you to not be is a current version of yourself. You're taking money that you earn, you're diverting it. It's not going from your payroll into your checking account. It's going into a financial services organization's account on behalf of you. They're getting your money, and they're buying micro shares of whatever you told them to buy. You have no idea what you own. You go look at your mutual fund page. Go ahead, look at it. But you probably don't even understand half of the data that's there because you haven't educated yourself on that form of investing. You just figure, hey, everybody else is doing it. Everybody else is getting 10%, 12% returns. We'll just keep chugging along. We'll just keep applying money to it. Keep getting them 10 or 12% returns. Well, on today's show, I highlighted a property that just on the cash on cash can get you 21% return. Or if you're okay with 10 to 12% return on your money, the other two deals did the same thing. One offered 13%, the other one offered 13.2%. But when you looked at the total returns that these assets provided, say if you held the assets for 3 years, and I'm just picking a number arbitrarily. We could hold them for 5 years, make more money. We could hold them for 1 year and a day and let them go because we would have met our investing goal. I'm just saying 3 years we hold them. Even if you just held the first one and only took $33,000 of your money and turned it into $90,000 of total money, you'd be getting 173% return on investment. 173%. That's like almost 60% per year in returns. Now, if you're not getting returns like this, you may be doing something wrong. Or you may not be investing in real estate. And if you are investing in real estate, you may be doing something wrong. If you want to start doing it right, all of this investing stuff, even if you're already invested in real estate assets, if you want to start doing this the right way, take your pride, put it in your back pocket, go to lifestylesunlimited.com, click on Start Here, and start the next chapter of investing in your life. And let's get you going.
Thank you for listening to Lifestyles Unlimited's Real Estate Investor Radio Show. Ready for more of the map? Visit lifestylesunlimited.com. Explore our videos and articles. Click on the radio tab to access past show podcasts. View the radio show schedule and listen to our best of radio shows. Want to continue the conversation? Follow Lifestyles Unlimited on Facebook today. We want to meet you as well. Sign up for a free workshop at lifestylesunlimited.com. Until next time, remember, it's not the money, it's the lifestyle.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.